What's up, Banter fam? Hope you're having a nice day. My name is Miles, and welcome back to the show. We have a big show planned for you guys today. We're going to be talking about the Bitcoin cycle, the future of Bitcoin. We're going to be talking about the latest updates in this Luna saga and talking about our outlook for the market in 2022. I've got Jason joining me on the show later to give his insights into the Bitcoin cycle, and we're going to run through some of the breaking news that has just come out this Monday. So I'm looking at the Bitcoin chart right now, and it is 7 consecutive weeks of red. Never in Bitcoin's history have we had 7 consecutive weeks of red before. And the question I'm asking right now is, are we going to break that trend? Are we going to flip green for the week? Going into the week, we saw the stock market was pointing upwards on the futures market, but now we are seeing a slightly weaker open than I was anticipating. But once again, you can never really trust a weekend pump in this market. And that's one of the main reasons why we didn't see the pump continue into Monday. But obviously this weakness is coming off the back of what happened with Luna over the past week. It was a crazy week. It was one of the most difficult weeks in my investing career. And I'm sure it was a difficult week for you guys as well. It was a week of ups. It was a week of downs, but we're here to reset. We're here to go again this week, and we're here to approach the market with a fresh look and a fresh outlook. And part of that right now is to analyze Bitcoin, analyze where we sit in the cycle, and how we can position ourselves going forward to benefit maximally from this market at the moment. So let's just recap a little bit of what happened with Luna, because we did get some massive updates this morning as to what Do Kwon is planning to do in terms of resurrecting the chain and his plan going forward to reimburse holders. And obviously, Luna went to zero. We did see the biggest collapse ever from an altcoin. We saw a $40 billion market cap effectively get wiped out. And unfortunately, for people that were holding the bag, we got wrecked on this one. And it's something that we took a lot of lessons out of. And I guess it just goes to show that you have to be taking profits. You can't rely on this market and holding altcoins for an extended period of time. And we did see this in full effect, obviously, with the Luna price crashing to zero. And that did have ramifications across the rest of the market. We saw altcoins take quite a large hit. We are seeing currently over the last week, many of the major alts down 20, 30%. One of the major reasons this happened is because of the effect that this Luna dump had on Bitcoin and had on sentiment towards DeFi as a whole. Obviously, since DeFi is quite speculative, a lot of these projects rely on hype cycles, rely on speculation. Once you inject a bit of uncertainty, a bit of panic into the market, we can see significant drawdowns. And that's why we saw some of the L1s like Solana go down 26% for the week, Avalanche down 34% for the week. And we did see some overall choppiness across the market. But Luna did come out and they said that they had a plan. And some very interesting stuff came out from Do Kwon's camp in terms of what they actually did with these Bitcoin funds and what they're actually planning on doing with them in the future, or the remaining funds rather. So LFG's reserve, they announced went down from 80,000 Bitcoin to just 313 Bitcoin today. So this means their $3.1 billion worth of reserves is now only $87 million. So while LFG acquired those Bitcoins to save UST, it simply couldn't. And it didn't matter how much of this Bitcoin they were using to pump into the market. They simply couldn't save UST, and it lost almost all of its value. So it was quite shocking to me to see that they actually deployed all of their Bitcoin, because a lot of these kind of redemption strategies did rely on the fact that Do Kwon had some Bitcoin in his reserves to still utilize. But it was made very clear that that wasn't the case. Now, Paolo actually came up with a very interesting theory, which is a bit of a conspiracy. And I don't 100% agree with this, but I think it's worth talking about, because this is speculation that potentially this UST bailout was an inside job and was allowed to be carried forth to bail out the whales. All other retail bag holders got incinerated. And there's a massive class action criminal proceeding possibly coming out of this as a result of this. And it's quite scary at the moment. So, and that's obviously from a Luna perspective, because 2.7 billion in face value of UST were able to be sold for Bitcoin in 2 transactions last week. And what that means is that holders were actually bailed out despite the UST price trading at 60 cents. So some of these massive whales, according to some of the findings that Paolo did, he worked out that the conversion rate didn't line up with the actual rate of UST. And some of the big Luna whales were actually prioritized in terms of the UST being sold and the Bitcoin being sold in order to pay back these holders. So it's an interesting theory. You know, I don't necessarily know its 100% authenticity, However, it would be a shame if this is actually the case. And there has been a lot of speculation as to whether Do Kwon had some ill intent to do with this situation. And obviously, this Luna plan is a little more underwhelming than people were expecting. So if you're a Luna holder, this is kind of what is happening at the moment. And this is kind of what they want to do to dig themselves out of the situation. Personally, I don't think Luna can dig themselves out of the situation at all. I would say in its current form, Luna's dead, UST is dead. But this is what they're doing for anyone that's interested in what's actually happening with the tech now and how holders will be potentially reimbursed. So what Do Kwon wants to do is he wants to fork the Terra chain into a new chain without UST. So I think one of the major benefits of Luna is that the tech is actually quite good. So if you ever use the Terra station, if you ever use the Luna chain, you'd know that the transactions are fast, the transactions are cheap, and it rarely suffered from congestion. So the tech itself as an L1 is actually quite positive. The old chain, Terra Classic, token Loon C, and the new chain, Terra. So they're going to be splitting up the chain into 3 parts. This means Luna will be airdropped to holders across Luna Classic stakers, Luna Classic holders, UST holders, and devs of Terra Classic. He actually outlined exactly how this will be taking place in the Terra ecosystem revival plan, which Ram will go over in tomorrow's show. But I wanted to give my quick thoughts on this topic right now, just to give you a little bit of an insight into what I'm thinking about this plan. So firstly, only having $87 million left in the reserves means that they essentially can't pay UST holders much. I think it comes out to around 6 cents per UST holder, which obviously is far from ideal, even if they do try and compensate the holders. What I made clear today was that I'd like to see some of this compensation going back to the smaller holders, not the big whales, not the big guys with millions and millions of UST, but I'd like to see some of the smaller holders and be compensated for this, because those are the guys that are ultimately affected most if we look at it from a community perspective. So that's what I'd personally like to see. However, it's going to be very hard for them to reimburse a lot of people, considering just how much these reserves were depleted. And we did see some massive ramifications across DeFi because of this. We saw TVL dominance is actually spiking in a massive way towards Ethereum. Now, one of the major reasons this is happening is because a lot of TVL left the Luna ecosystem. So now we're seeing TVL dominance being skewed towards the safer chains like Ethereum. And we're also seeing a slight risk-off approach when it comes to investors that are now choosing to go towards these safe haven chains as opposed to some of the riskier chains. That's why when we look across the market right now, we can see that some of the riskier chains are actually taking the biggest hits. Like Aurora, a lot of people were speculating on the new US dollar stablecoin on Near Protocol. That's taken a massive hit. Protocols like Phantom, they're taking a massive hit because they are considered to be retail chains. So they take a bigger hit when the market's down, and typically they pump when the market's up. But seeing this Ethereum dominance really increase is kind of like a reset in this market. It's been a yearly downtrend for Ethereum dominance. And now we're finally seeing this market kind of switch on into risk-off mode off the back of what happened with Luna. And it's a really interesting shift for the market as a whole. I think it's one of the biggest shifts we've had in probably 2 years in terms of sentiment. And it was one of the worst weeks on the market since we had the crash in March 2020. But I do think there's a massive opportunity now. And I did a tweet on this yesterday, and I think what is happening because of this Terra exodus is going to have many, many positives for other chains. And that's because Terra had some of the best developers, some of the best projects, some of the best minds, some of the best creators in the space. Those creators, a lot of them are done with Terra now. Despite the chance of a fork or a new chain being launched, a lot of these developers, a lot of the smartest minds in crypto are now searching for a new home. Now, I'm pretty confident that the chain that's actually able to attract this talent, that's actually able to attract this talent pool and the minds behind Terra can stand to benefit. So now, as investors, we have to work out where this capital will rotate, where this development will rotate, and which chains stand to benefit the most. I believe whoever seizes this opportunity will stand to benefit massively. And that's not only development. This also extends to community. The community members, which are lost with Terra Luna, which are lost with Anchor Protocol, they're going to need to migrate to other chains. They're going to want to find new opportunities in this market. So as investors, our job now is to search for those new opportunities. Now, that's not going to happen overnight. The next Luna or the next algorithmic stablecoin that succeeds isn't going to happen overnight. But it is something that as investors, we are working towards finding And we are still working out just how the effects of this Luna crash affects the market and the ramifications it has across the altcoin market. But I think it's important to start with Bitcoin, because as tempting as it is to jump into altcoins right now, start speculating on what the next Luna is, start speculating on where this capital will flow. I think the safest, the most pragmatic, and the most logical thing to do right now is to take a step back and look at where we are in the Bitcoin cycle, take a step back, look at how Bitcoin is trading and our outlook for 2022, and then we can make better informed decisions as to how we actually want to trade these altcoins. I think a lot of us got swept up in some of these altcoin waves, Luna included, and I think by analyzing this market with a holistic approach in terms of what equities are doing, what the macro environment's saying, and what the Bitcoin charts are showing us, I think that's the most pragmatic way to go about the market right now. And today was a historic day. Today we saw 32 central banks, 12 financial authorities, 44 countries, meeting in El Salvador to discuss financial inclusion, digital economy, banking the unbanked, the Bitcoin rollout, and its benefits in the country. So we are seeing some of this nation state adoption come to the forefront. We saw it at the Bitcoin conference a few months ago. We had the Honduras Prospero announcement. We had some positive regulatory news come out of the conference. And I think this news will continue to come. However, we just have to stick to the course. We have to stick to the process. And I think eventually this adoption will continue to take place. But it's good signs that we are seeing some of these conversations actually taking place from a government perspective. But let's talk about the Bitcoin cycle now. Let's talk about where we're going to be headed in the future. And there's no better man to do it than Jason to join me and actually have a discussion. So Jason, welcome to the show.
Thanks for having me again on Banter. How are you, Miles?
Thanks for joining the show. It's two Aussies right now, so it's good to see some Australian power in crypto YouTube at the moment.
Two different time zones.
Two different time zones makes it difficult, but I think
I'm Miami
in
Australia. I'm Miami here. You're Miami up there.
Yeah, you're in the Gold Coast, right? So that's got a bit of sun, bit of beaches,
and lots of rain at the moment. But we are here to look at Bitcoin, and I'm seeing all the comments come through. So thanks to everyone live joining us. And yeah, just to get on with the looking at the macro cycle, that's been like my mainstay as well. This last 2 years, primarily in crypto, but then since I started in 2017, I started the same cycle: Bitcoin, ETH, and then you sort of start looking down the altcoins. You get swept up in the hopes and the dreams. This thing has to go to the moon, and then you hold it through the bear market, and you're like, "What the hell did I just do?"
So what are your biggest takeaways from the whole Luna debacle? Do you have anything that you'd like to address in terms of what happened with Luna?
Don't gamble on. Can we swear on here? Call them shitcoins, altcoins?
Yeah, sure. But hopefully YouTube doesn't demonetize us.
I've said it quick, and it's in an Aussie accent. They'll never pick it up.
No, they won't.
Yeah, I wouldn't gamble on them, and then they're always going to come back down. 99.9999% of them are going to come almost all the way back down, and the winners, they'll make it through, and you'll start to see the higher lows. The smart money will be buying up when everyone else is fearful, and the cycle repeats again. And of course, definitely no Bitcoin maxi here. I see some comments, but it's just a matter of looking at what has survived 13 years and what hasn't. And we're starting to see Ethereum come through, and there's not really anything else at this stage, which is getting that journey through each of the cycles. It will happen. And it's just a matter of just looking for those. And personally, I like to talk about paying a premium. It's so much more difficult to try and pick the exact bottom. And I don't claim to ever pick an exact bottom or exact top, but paying a premium once you see the momentum moving in favor of a particular crypto or an asset that you're trying to invest in, because that's giving you the signal that the smart money is there early on.
You want to ride waves. You want to use altcoins as a proxy to make profits. Now, however you view profits is based on your outlook. That might be Bitcoin, that might be Ethereum, that might be real estate, that might be cash. Personally, it's not cash, but depending on your outlook, you want to be using these altcoins because they are giving us opportunity to make life-changing money, but you have to do it right. And I think a lot of investors get it wrong. I've gotten it wrong in the past. I'm sure a lot of our viewers have it well, but now it's about looking what we can do in the future. And how we can actually set ourselves up for success. So you talk about this Bitcoin cycle. Can you run us through a little bit how you actually view that and what your outlook is there?
Yeah, I mean, look, this is just a chart of Bitcoin as it is that we see it today. And I focus primarily on technical analysis, looking at stuff that's over 100 years of data looking at Gann analysis. So WD Gann, William Dilbert Gann, and also Wyckoff, which everyone probably is aware of, but they're probably not so aware of Gann. Wyckoff actually studied Gann in the early 1900s. There's an article of his that was written in 1909. Wyckoff went around with pen and paper, followed Gann for a month, 300 trades. Gann got 280 of them right. Like he's an absolute genius. I'm not a genius, but I like to follow his work. In terms of the 4-year cycle, this is not about like a blow off top and an absolute reckoning of the entire market. It's just about looking at waves. So we're up for a few years, down for a year or so. And so with that in mind, I'm looking at somewhere towards later this year. Doesn't mean we have to have a significant, extreme major crash again, but we might. But I'm just looking at somewhere towards the end of this year for the Bitcoin market to low and then start to rebuild from. And I know that's possibly too much hurt for a lot of people, but I'm not going to sugarcoat anything. That's the way I've been seeing it. It's been working pretty well. And, that's the way I continue to see it. The market is still playing out with that 4-year cycle. So you want to have a look at it on the chart here?
Yeah. Bring it up on the chart while I'm just looking at this, because we can see like the Bitcoin performance each year. It's actually scary. It is almost scary how accurate it is in terms of the yearly ups and downs. Like it's 3 years up, 1 year down, 3 years up, 1 year down, 3 years up, 2022 down, like 3 years up again. Like I don't know. It's not a big sample size. I think the issue I have with a lot of these cycles is that at the end of the day, like it's mathematics. There's a probability that this continues, but correlation doesn't necessarily mean causation. And the fact that we are getting these cycles, I mean, obviously there is real data to underpin that in terms of like the Bitcoin supply, the halvening, the psychology that goes into it. But I'm genuinely interested as an investor and a Bitcoin enthusiast to see whether this continues. But I mean, just looking at it here, it's kind of shocking how accurately we followed these cycles in terms of yearly performance, not in terms of repetition percentage wise, because obviously the movements are getting smaller and smaller as Bitcoin increases.
Diminishing returns, as we see. And I'm expecting it to be diminishing to the downside as well. There won't be as big a drops. And in investing, we always love to say there's no such thing as cycles. Or people say that there are cycles and others go, no chance. It's not predictable. You can't forecast anything. That's fine. We're not trying to predict an exact price. But in terms of a time, there is cycles in everything, 100% of things we do in life. So why not in the markets, which are made up of 100% humans, bots, of course, but the humans have to program the bots. So it's all part of cycles, and it doesn't necessarily mean we have to have an exact cycle, like you just said, of a big blow off top with these huge percentages up and huge percentages down. But we'll still see that ebb and flow in the market. And in real time, like we've all seen here, it still feels extremely real and hurtful when the market drops 20% or 30% against us, even though in the past it's been 50, 60, 70% in a day because it's just less liquid.
Yeah. I mean, just looking at this Bitcoin cycle right now, could you explain the chart to the viewers? What are we looking at for the rest of this year or the next few years?
So this is what everyone's seen before. They see this often with that logarithmic curves where they just like say, oh, all the tops join up and we're just going to start going out to this thin nothingness. That's also possible. Basically, what I'm looking at here is just the 4 years between each of the troughs. So the low to the major low. So if I take it off log, you can see that this was the major low of that cycle. So just a brief understanding, 4 years, 3 years up, 1 year down. Most people have probably heard about that before. And then I went through and broke down these 4 years into thirds as well. So there might be other cycles within that, and you're always going to get cycles within cycles within cycles. So you break it down from monthly, weekly, daily. And if you're a short-term trader, a scalper, you're going to go into the minute charts as well. And you're always going to see cycles. And so within this, it's kind of like a 13 to 19 bar cycle within the 3 years. So you can see 35 bars up each of these bars. And if people love their candles, you can do candles too. Doesn't matter. We're just trying to get the data from the chart. 35 bars, each bar is 1 month. So 36 bars is going to be 3 years. So approximately 3 years up, previous, approximately 3 years up. What we just saw again, approximately 3 years up. To the downside, I'm looking at about 12 months down from the peak to the bottom. But then also the significant low to the next significant low. And so that's about 15 bars. And so from this one, if I want to zoom it in just so you can see a bit clearer, that's where the market peaked out, about $800, dropped back down. This is in that first cycle, or that second cycle, sorry, from 2015 to the peak of 2017. And so then there was another significant low here in September. So I'm just sort of measuring to give me an idea of how long these cycles last. They're going to be a bit longer, going to be a bit shorter, but roughly sort of that 15, 16 bars, which is 15 to 16 months from low to low. So that's something different that a lot of people look at. They just go, a 4-year cycle, it's to a peak, and then they try and measure from peaks to peaks and peaks to lows. This is purely just looking at lows and then identifying where that peak comes in. Is it in the later half of the 4-year cycle, or is it earlier in the 4-year cycle? And that gives you an idea of how long that next move has to go and how much more we can move up from this point. So the good news is that we peaked out later in the 4-year cycle rather than early. So meaning, let's look at this 4-year cycle here. We peaked out 3 years in, and we're probably roughly coming down in somewhere into, I've got here about September, maybe into November or December. So somewhere in that 3rd to 4th quarter, we'll probably see another low, maybe a lower low, maybe a higher low, but at this stage, potentially a lower low. So from that, then we start to move up again into that next 4-year cycle. And then this whole 4-year thing becomes cycles within a bigger cycle. And then we'll probably have a 16-year cycle. And so that all then starts to... Exactly.
Right now.
Exactly. And so what we don't want to see next cycle is a peak in the first half of the 4 years. So, if we just start to look at that, we, maybe come down. And if we get a peak within that first half and then come down, that's going to be a lot weaker moving forward. So that's probably what we don't want to see if we want to see a prolonged Bitcoin bull market that runs for years and years and years. So in terms of the good side to this, we want to see it, come down to these lows and just take its time to come up. Maybe we come up late 2023, 2024 and start to peak out 2025. That's going to be a good sign for us. And then if that next 4-year cycle peaks early, we'll know that that's probably the end for a much, much longer period of time. So I think we still got a few more years to go for good times for Bitcoin, but it's going to take some time, especially with this ending of the 4-year cycle and then building for the next 4-year cycle.
So your kind of thesis here is that based on the cycle theory, we've got a few more months of negativity left, at least until the end of the year, until we start to look at maybe creeping back upwards and then a peak towards like 2024, if we're going by the cycle theory.
Yeah, probably a peak late 2024, 2025. I still don't know yet, and I don't really like to make claims for that, but it's just more so in terms of a peak. It has to come later in that 4 years in order for the next 4 years to be similar to the last. If we get a peak early in the 4 years, it's going to be not good for Bitcoin for an extended period of time. And people are going to be like, the 4 year didn't work. And you're like, well, the 4 year is low to low. It did work. And this is just giving you a signal that the cycle is weaker than stronger.
This, the recent few months of events have been a lot different to previous cycles. So obviously, when we were mapping the cycles last year, and I know Sheldon and Rand mapped it a little bit, we were expecting that big blow off top. We were expecting that major explosion, which we've seen in 2013, 2018, and we're expecting that massive altcoin season, which in hindsight we got, but just maybe not to the extent everyone was anticipating. And usually when the market is anticipating something, it doesn't end up happening, and vice versa. That's technically how markets work. Do you view the fact we didn't get that blow off top and that big wave as invalidation of the cycle, or are you still a proponent of this cycle theory being still valid if we're looking at kind of like the low to lows?
It's 100% still valid for a 4-year cycle theory. When you look at it from lows to lows, which is what I use in other markets as well. If you're looking for this big blow off top, then of course it's not going to happen because everyone's expecting it. And so it's always going to do what people are least expecting. It's going to find those pain points. Everyone was looking for 100 grand. It didn't get there. I think the perma bears are looking for 3 to 8 grand. I doubt it's going to get there. So it's never going to do those extremes. It's always going to go somewhere in the middle, cause the most amount of pain to the extreme on each side, and then start to move again.
I mean, my charts are telling me a few things. I mean, everyone's charts have different levels, and at the end of the day, charting isn't the be all and end all, but I'm definitely seeing 24K and definitely seeing 18K. And then the worst case scenario on my chart saying 12K. So do you think we could potentially get that low by the end of the year?
Oh, look, anything is possible, and everyone hates hearing that because, look, I'm happy to say that because at the end of the day, no one knows 100% for sure. You're really just looking at how is the market responding to the tests of the upside and the test to the downside. So the levels that I can see are pretty similar to what you got there. The only other ones were that's at around that mid 20s. So we've kind of tested that now, and we're just starting to have a little bit of a drop. I think once or if the weekly closes below that 28.5, 29,000, probably looking towards more downside. For now, probably for another few weeks, several weeks, we're probably going to grind it out between these levels of 25 to, these underside levels here are about 37, 38. So what does that look like on the chart? I'll just draw you a quick little line, probably about there or so, because it has to come up and test at 34, come up and test those. It's essentially just big money testing who's left in the market. Is there supply left? If there is, they'll see the prices drop. They'll obviously get out. That'll cause the price to fall further quicker. If there is still more demand, then they'll push it up to the next level. And it just keeps doing that over and over and over again.
Traders too. I think there's some massive opportunities if you're a trader. And I always recommend, well, not always, it really depends on your investing style, but I personally have a percentage allocated for trading. I think there'll be some massive opportunities to take advantage of these swings, both in terms of longs and shorts on some of the altcoins as well. Because as you said, if we do bottom out, we look to push up towards like the 35K region, test maybe even 40K, come back down, then like that's a big range. It's like a 15K range. And some of these alts will bounce and crash more than 70% in a single move.
Alts, yeah. You'll get hundreds. And then if people are trying to trade them, it's a good trader's market. If they're trying to time lows and buy up to accumulate, do the dollar cost average thing and wait for this next cycle, I think most of those people are going to get wrecked. And then we'll have to basically churn through all of those people trying to buy lows. Then we restart afresh, and the altcoins will come back in a year or two's time. But all these bounces, say for Bitcoin in particular, 46% we went up, and then all of a sudden we've crashed. So anywhere from where we currently are at 25, going up just to this first resistance level, that's still a 35% bounce up to 34K. Then up to around that 38K is another 50% bounce. So it's going to be big swings when you compare it to a traditional market. But I think it's still more so in a trader's game until we see confirmation on breakouts.
Speaking of big swings and speaking of traditional markets, we are seeing this NASDAQ Bitcoin correlation basically at an all-time high, 0.95 positive correlation right now. I think we are still very beholden to what happens on the NASDAQ. Unfortunately, if you're a bull, the NASDAQ does show room for potentially another 20% correction. I think Gareth Soloway came on the show last week and kind of confirmed that thesis, although the macro environment
Bitcoin or NASDAQ?
The NASDAQ, which would obviously result in a Bitcoin drop of a similar size if it maintains this correlation. What's kind of your outlook on the stock market? Are you also kind of the opinion that this correlation will continue in the short term, or are you trading stocks as well?
I see it continuing in the short term because cryptocurrency is essentially tech. And now I can get into a bigger cycle, but I won't do too much of that now. I'll just mention that it's an 18.6 year cycle looking at the real estate market, which is the biggest market in the world. And it is what drives everything that we do in the world. So with that in mind, and I know it might not be everyone else's thesis, but that's essentially how things have been working. Tech for the second half of the cycle, which is what we're in, tends to underperform the stock market. The second half of the cycle is for banking, it's for real estate, it's for builders, because now that we've had tech to build us out of that previous slump, which was the GFC, these are big cycles, not altcoins where we're like, 6 months here, 12 months there. From 2009-10, we've been growing. Tech has been absolutely booming. It's gone nuts. Now it's starting to come back. They're getting repriced, and that money is then flowing back into where the profits go, and all the profits go into the value of the land because they're not making any more land.
Well, interestingly, when we talk about tech getting repriced, we've seen Netflix, Facebook, some of the biggest companies in the world actually take bigger hits than Bitcoin right now. So we're seeing a massive sell-off. I think it's been underestimated. A lot of Bitcoiners, a lot of people that are very kind of pigeonholed in the crypto market, are forgetting what's actually happening on a macro
Totally.
landscape right now. And like, when we're seeing a 70% drawdown from like the likes of a Netflix, or a 58% from a Facebook, and Bitcoin's only down 35%, I mean, that's telling, isn't it?
Yeah, well, Bitcoin hasn't fared anywhere near as bad as the NASDAQ. I have my chart up there. So I'm just looking at significant lows. NASDAQ has fallen all the way back below March 2021 in terms of its price. And that gives me the idea of strength and weakness. Bitcoin overall, I think it's down about 60% from the highs. But in terms of this recent fall, it is 47%. But from the highs, I think it's about 63 to the low.
From the
So
highs. I was talking year
from
to date.
year to date. Yeah, so I'm working in. I know a lot of people look at year to date. That's for sure. I'm working in cycles using tops to bottoms, and in terms of the 4-year, low to low, because I think that's a better way to establish where those highs were. Because Nasdaq from the high, which was at a similar time, which was November, it's down 30%. So I've got a danger level for the Nasdaq, which is all the tech. I think somewhere below that 9,000 points, the NASDAQ tech stocks are probably going to be in a lot of trouble moving forward into the second half of the cycle, which I think will peak somewhere late 2026, maybe 2027. That's for the stock market, and everything else is sort of going to peak at that point where we have this extreme greed that we've seen in altcoins. You'll see it across the world in terms of Western developed countries. And then after that happens, you know what happens? It all goes pear-shaped. And we see it time and time again because it's all just human emotion. So we've got another several years to go. And I know it can be hard for a lot of people to believe. How can it happen? Property prices are so high. Stocks are still so high. We can't afford it with inflation, blah, 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 blah. It's happened for over 200 years. And I expect it's still going to happen moving forward.
Yeah, and not to scare anyone, like there'll be massive opportunities in the meantime. There'll
Huge,
be
yeah.
opportunities to take profits, firstly, opportunities to make gains on the way up and also on the way down if you play your cards right in terms of selling, buying back in, shorting, however you want to play the ride down as well. And then also like where you invest that capital then becomes important. So as a crypto trader, as an investor, what's kind of your strategy for profit taking? Are you taking money into fiat? Are you going to Bitcoin?
Yeah, Bitcoin, ETH, stables, obviously not UST. That wasn't my game. Fiat, and then real estate as well. So that's my primary holdings. I don't get into metals. Like if you're going to play metals, you might as well play Bitcoin and make some better gains. If you're buying physical, I mean, it's such a ripoff. Like to get in and out of physical, 2 to 10%, and then when you get in, get out, and it doesn't move that much. That's obviously my opinion. Everyone has their own financial goals, but I think it's another way for the other side of the other type of people who are interested in metals. That's how they get swept away and sucked into another market, like altcoin people did in 2021 and they did in 2017, like I did. It's just another marketing ploy to say, go and buy gold because the world's going to come to an end. It's not happening. This is like, it sounds all doom and gloom, but 2022 now for probably the next 6 months, I think is going to be an absolutely amazing time. We'll look back on this in probably 2 years and be like, I wish I had bought through that period of 2022. Even if Bitcoin does go down to 20 or 15K or 18K or whatever, the risk reward is so much better now than it was in 2021 when everyone was taking that gamble.
So you're seeing these next 6 months, 6 to 8 months as kind of like an accumulation period, right? Of course, we can get that massive downwards leg. It can still happen, but you're viewing the potential gains from that low point to be substantial enough to want to accumulate some entries, right?
To be worth the risk. Exactly.
Yeah.
Say we're at 30 grand, which is where we're almost exactly at 30K now. Say to one of the worst case scenarios at say 18K, it's 40% down. But remember, you're playing Bitcoin here. It has the potential to do hundreds of percent up. If we take it from that COVID low to that peak, 1700%. It's pretty massive. And we could still do a few 100%, which is still going to be a lot better than many other traditional markets out there. So, I mean, from 18, if it got down to 18 or 20K, and we have a target of say we just double the peak of $70,000. I know it's 69. Let's call it 70 for a round number. So that's about 140. If we did get there from these lows of about 20K, that's still massive, 600%.
Wow.
So And that's just, I think that's quite, look, 120, I think is pretty conservative. That 100 to 120, pretty conservative. At this point in time, especially in the bear market, people, I think, are happy to be conservative. Come that bull market again, you watch everyone go bananas. I'll have it on my channel. I'm sure Banter will have it on his channel. 500K Bitcoin, $1 million Bitcoin. It'll all come back again.
It'll happen. And look, if you trade the altcoins during this period and you play your cards right in terms of diversifying, obviously, across some of the alts, then as long as you take profits, there's potential 100x gains on the table here. Like
diversifying for trading, maybe. Diversifying for trading, maybe. I'm not going to diversify to dollar cost average into any of these alts until they've broken some structure to the upside. But that's just me, Definitely trade them.
Yeah, it depends on what your strategy is. I think, look, how my strategy kind of works is I'm happy to accumulate some of these projects, but it means that I'll be taking heavy profits at the top. And let's say you put $1,000 in, you make 10,000, then my aim would be to take like 8,000 out, and then I'm happy to hold the extra 2,000 as a bit of a punt or as a bit of a long-term bet, so to speak, so I can DeFi with it. That's just my personal strategy. But I guess the aim is you want to be taking the majority out. If you want to keep a percentage in, then by all means do it, because we can't call the bottoms, but we also can't call the tops. So the top could be a lot higher than we anticipate. So that's why you want to ladder in and ladder out of these positions. If Luna taught us anything, it's that.
Definitely ladder out of those sort of things. Altcoins, look, my own view is get all out of them as best you can, and don't even worry if you get caught in it again. You now know that altcoins generally come back 90 odd %. And so if you're getting out on the way down and you're like, damn, I'm already down 40%, just know the market can do another 40% from that 40% and another 40% from that 40%. And so it's never, I don't think it's ever too late in that regard. Obviously, towards the end of a cycle when it's down 95%, it's possibly over. Maybe you just couldn't be bothered anymore. But I like to clear out my portfolio so it gives me a clearer starting point again so that I can build. While I'm always thinking about all these other altcoins that just haven't made it, it jams me up. Like I can't think clear. So it's always good as an investor to be able to think clear. Otherwise you're screwed again and you repeat the same mistakes.
So what levels do you jump into alts? Like I know you trade alts and you're more of kind of someone that will accumulate Bitcoin, Ethereum. What are you looking for on your charts? Let's say you wanted to buy like a Solana.
Solana, what are the that's charts what I was going to.
Yeah, it's just an easy example. What's kind of like the level that you need to see to like start, I guess, developing a trading position, as you said you don't hold it?
Yeah, so Solana's a good example because I traded this one through that bull market. No way did I buy that bottom, all these bottoms. No way did I sell the top. I was a long way from the top, but and I got absolutely ridiculed on Twitter. That was probably one of my only trades that I mentioned publicly, because I know how much people hate hearing that you're selling a coin in a bullish market. So I'm like, screw that. I'm going to keep it to my members and just be able to have a clearer mind when I'm trading. So what I'm looking for is a consolidation, something similar to this, or we go back to a previous area. You've got consolidation. This is basically a downtrend. The first thing I love to see is a breakout of higher lows, a breakout of highs, and then come back to form a higher low to test the tops. That happens so often. So you can see these tops. Look at this market, just come back and test that. And then it pushes away. The problem with the majority of people, especially new to the market, they'll go, well, you just missed out on 140% because you didn't buy the low. And then if you buy that next breakout, they're like, you missed out on 300%. It's over. I'm not getting into it. And then they look onto something else. And then you realize, hang on a minute, the market actually gave me all those entry signals. I'm paying a premium, maybe 300% from the exact low, but those returns from those two entry points still got me 1,000%, 1,300%. So it's just a matter of not getting too swept up in the ego of trying to buy the low and buy the top, but just taking the signals as they come. Here's the breakout. Here's the next breakout. Just buy the breakout.
It's as simple as not catching a falling knife. Like you'd much rather pay a small percentage premium and have confirmation on your trade than trying to constantly catch a falling knife. And I feel like that's the mistake a lot of investors make, because the terminology kind of buy the dip is chucked around a lot. But like buying dips aren't created equal, basically. Like obviously
Exactly.
buying the dip is a successful long-term strategy for your Bitcoin, your Ethereums, but for a lot of these altcoins, unless you've got like a very structured plan to get either out of them, take profits, or you have a specific thesis that you're writing, then just aimlessly buying the dip is going to cause you some troubles. So that's why I kind of like your theory here. Like we obviously have differing styles, but I can respect it because I think there's some logic there in terms of paying a premium, but then also catching it at a better level, risk reward wise.
And you're getting in on the momentum so that you can make that fast money. You just have to have those stops in place, because sometimes these breakouts happen and then they come right back down, and they wait around until they try to test that breakout again. Just a quick note on that flip side to the dips. People will be like, well, if I just bought all of these dips, I would have a much better entry price than paying that breakout. The reality is you're not sure whether this is the bear market and you don't see those high prices and this project fails, or you're basically, that the lower prices come in and then you get a lower premium to pay. So this could have gone further down, then the breakout would be further lower. Obviously, I'm in negatives here, but it could be lower down, and then you get that move up.
Well, that's the thing.
So
on Solana, for example, you could have been buying this dip, and then that dip, and then that dip, and then dip, and then that dip, and then you could buy this dip if it gets down to like $20. You know what I mean? So it's like you may end up paying an average of $80. Whereas you could kind of wait for it to bottom out, hit 20, and then buy at 40, and that's half the entry.
It's basically insurance. People get insurance on their car, insurance on their health, insurance on their house, on their contents in case something happens. So this paying a premium, which is like your insurance premium, that's all you're doing here. It's the same concept. So I'm paying an insurance premium to ensure that I'm going to see some upside. I have a much better probability of seeing the upside here.
Yeah, and I like the strategy as well. I think we definitely need to get you on the show in the future, because as this kind of plays out, I think that there'll be plenty of chance to like get updates with how the market's tracking, seeing how the cycles actually play out, seeing it'll be interesting to see like when you're looking at getting some of those serious entries as well. I'm just circling
all the dips on the way down here for Solana. Everyone's talking buy the dip, buy the dip, buy the dip, buy the dip. What's this average price? And for sure, people are going in way heavier at the top on their dips, and then as the market gets lower down, they've basically pyramided the wrong way. So they've gone in heavy at the top, and they don't have any more money left, and they're basically buying up smaller positions at the bottom. So to get any sort of return, their average price is now here. And to get any return, they need the market to go almost all the way back up to their all-time high. So it was I think
the issue with this, and the reason a lot of people did it, and even I did it as well for a lot of altcoins, and the reason we kind of did it was because we didn't have confirmation in our heads that was the top. I think a lot of us were still holding on to the hope that we were going to get that blow off top, and it was a temporary dip. The double top wasn't invalidated at that time. So I think the reason a lot of people kind of bought in the dip was because there was no kind of clarity as to whether it was the end of the cycle, or it was the top of the cycle, or whether it was the bottom. So it's or just a quick pullback. So I think that distinction is what made it difficult for a lot of traders during that period.
I was not sure if it would be the top, and the only thing I started to do here in middle of November was when this breakdown happened in Bitcoin, was sell out of my highly speculative alts, and then as it broke down a little further, got out of the rest of my alts, and then I just held on to my alts through here that was still trending reasonably similar, not all, but reasonably similar to Bitcoin and the ETH price, just in case it wasn't the bottom. And the reason I got out up here is because the market went for a new all-time high and then fell back underneath old all-time highs. And that's a pretty significant signal that the market is weak. It tries to push out and comes back underneath those prices. So that's kind of tape reading, which is still TA, but you're getting into the tape reading. That's what I love to study from Gann and from Wyckoff, as opposed to kind of what you see 99% of the time out there. Hey, look at this one candle pattern. Hey, look at this, pattern of support and resistance. The tape reading really, really does help.
Yeah.
And it's tape because that's what they did 100 years ago, was read the tape. So I know we don't have tape anymore, but yeah.
Just wanted to say that everyone should subscribe to your channel. There's a link in the description. In fact,
Thank you very much,
subscribe right now, and also check out your Twitter as well. I think I showed the people your Twitter as well. We got Jason's links in the description if you want to give him a follow. We're definitely going to have him back on the show. because I think it's a really interesting. You've got a very interesting strategy, and I think one that I think you're fairly unique in the sense that a lot of traders, they'll kind of trade these cycles, but I guess your outlook in terms of tying it into the real estate cycle, the share market cycle is unique. So I really respect it, and I think we'll have to do it again.
Thank you very much. Stick around. I've got some good interviews coming up if you're interested in that, with some very legendary economists and traders for the cycle as well. So appreciate it, man. Looking forward to it. Some good comments here. Cheers very much.
Thanks for coming on the show.
Thanks to everyone. Yeah.
Thank you. Yeah. Wow. What a show. There was a lot of golden nuggets in that show. I think he has a really unique strategy, and I think it's a good kind of perspective reset that, yes, we can potentially have some more downside this year, maybe even bleeding into next year. Depends on, how you want to view these cycles. But at the end of the day, it is going to create some amazing opportunities for massive profits, massive gains in the future. And we just have to kind of stick the course, stick out these next few months. They might be a little bloody. They might also provide some short-term opportunities for flips, but it isn't really the market to be speculating. It's a market to have your head down, do your research, come up with a plan, and set yourself up for potentially what could be a year of massive success. So obviously go check out Jason's channel. I'll see you in the next show, which will be tomorrow. Peace out.